Right then, good afternoon then folks, and just another update from us at the end of another week of trading. We'll start with the calendar, but the markets this week not really driven by the calendar, so not much to see here when it comes to the economic calendar. We've got a slight bit of movement off the back of NFP and the unemployment rate data this afternoon, but as you can see, Monday and Tuesday, no high impact data really to be concerned about. Memorial Day on Monday, bank holiday on Monday in the UK, so low levels of liquidity. Memorial Day in the US, sorry, bank holiday here in the UK on Monday, so pretty low levels of liquidity on Monday, so it wasn't a great deal really to do on Monday morning. Tuesday then becomes the Monday morning of other weeks. So as we got into the week, a bit of a kind of down first, up second week, obviously due to do with the debt ceiling being raised and the potential crisis of the US defaulting on their debt being averted for now. But we'll speak about that in a minute. We'll just have a quick flick through the calendar. We had some manufacturing PMIs week out of China on Wednesday morning, which didn't really help. Slightly sour risk sentiment kind of throughout the beginning of the week. Coming to some inflation figures out of Europe now. Inflation coming down in France, coming down in Italy, but still slightly higher than consensus, and also coming down in Germany, which brings us across the European inflation on Thursday, or on Wednesday, sorry, that wasn't, then European inflation then on Thursday, which again, down substantially from the previous month in terms of the year over year figure, down on consensus, so some pretty weak inflation figures, but having said that, still 6.1% in terms of a yearly figure across the Eurozone is still too high, which Christine Lagarde did suggest, said core inflation is not showing enough signs of dissipating as they would have hoped or as they need in order to stop hiking interest rates. So as of now, still 225 basis point hikes on the cards, and some slightly hawkish speak from Christine Lagarde during the week has helped some euro upside, but US dollar downside has really been the story of the back end of this week. We saw some good Canadian dollar strength coming in on Wednesday from some higher GDP figures. Previous was the 0% consensus, 0.5, and we nearly doubled consensus, or did double consensus, back up to 0.8%. So pretty strong growth out of Canada in Q1, which is a positive for that country in particular, and we'll have a look at that chart at dollar CAD once we get over to it now in a minute. But non-farm payrolls, as you can see today, a pretty strange figure once you come to these figures. 339 is the actual figure, up 150k, nearly 150k from consensus. So pretty strong non-farm payrolls report. Come around to the unemployment rate though, and it is not quite as strong. Previous 3.4%. Consensus was for it to tick up slightly, up 0.1%, up to 3.5, actual 3.7. So some pretty weak unemployment rate, or a pretty weak unemployment rate. Certainly in terms of consensus, not in terms of historical values, but I don't think the Fed will be too disheartened at the fact that unemployment has risen slightly. But non-farm payrolls being 340k over the month of May, does that suggest they need to keep the foot on the gas? We'll have to see how markets play out over the next week or two, but market participants do seem to think they may potentially be going on a pause, and that is probably what equity markets think as well. You can see equity markets rallying across the board. You can see S&P higher, Dow Jones higher, the Nasdaq higher, the Russell higher. You can also see that then dragging the DAX, the FTSE, the Nikkei with it, the VIX then pushing lower back towards that number of 15, which is the pre-COVID level of the VIX, where below 15 was seen as a positive for markets. Above 15 was then seen as or any acceleration above 15 was seen as a slight negative. Post-COVID has really been that 20 figure, but now we are substantially below that 20 figure, now testing that 15 number as we speak. Markets positive to end the week off the back of the debt ceiling being raised. Obviously, throughout the last number of weeks, there has been a jitters in markets as to whether the Senate will come to some sort of an agreement to raise the debt ceiling, which they have in fact done over the course of yesterday and the day before. And you can see kind of on Thursday, once we got into US session on Thursday, there was pretty solid upside across all the major US indices. into today, then that movement has continued into this morning and now has accelerated after that NFP print. The Nasdaq a little bit tricky, but Nasdaq has had the upside that the other stocks stock indexes has not had, due to its factor with the tech stocks that have been rallying off the back of introduction of AI into the world. But stock indexes higher across the board, which brings us into the dollar, which the dollar is now lower across the board. So the trend in the dollar has been reversed across much of these major currencies. You can see the big downtrend on the Aussie, downtrend on euro, downtrend on sterling, and downtrend in Kiwi, all due to the fact that the US were approaching the limit of debt, approaching the deadline for raising the debt ceiling, likely due to the fact that if they cannot create more money, if they cannot print more money, then there starts to become a scarcity of dollars. People need to get their hands on cash, and if you cannot create more dollars, well, then the dollars that are already in circulation are the dollars that need to be used. So people are buying up dollars strengthened off the back of that, and now you're seeing the reverse of some of those moves. The trend has slightly broken, not a complete shift in trend. This non-farm payroll support has been slightly positive for the dollar. Positive for stock index is positive for the dollar, which a lot of the time is not something you see, but that is what we're seeing this afternoon. So I think be a little bit careful into the close today, maybe see how markets play out. But now the trend, downtrend, and these four currency pairs has shown signs of weakness today. Does that positive NFP report reverse that and kick the dollar back into gear? Obviously, we'll have to see over the coming days and weeks. But I think this US dollar, I think this level in here, if you do get past this level across in here, not exactly a major level, not exactly a major level across there, but if that rejects there and fails to get above there, you'd have to imagine the dollar starts to cruise back lower, in line with the sentiment for the last couple of days. But if it does get back up there and does make an attempt at these highs back up here, expect that this trend may continue, and you'll be looking for longs into next week. But certainly that NFP data has thrown a bit of spanner in the works in terms of the direction over the last couple of days, but not a complete shift in trend. So we'll see how that plays out into the close and into next week. But a little bit cloudy. I think my judgment of the dollar at the moment is a little bit cloudy. A couple of levels we need to keep an eye on over the coming days. You can see across here, bond yields like it. Bond yields have not liked the debt ceiling being raised, but bond yields like that NFP report. So bond yields higher, the dollar higher, equities higher. US assets across the board seem to like a higher than anticipated NFP release. Apart from that, there's not not a great deal of things out over the course of markets this week. It was all centered around the debt ceiling. Was that going to be raised? Was that not going to be raised? We have fortunately got that raised, but it's not completely out of the woods just yet. They have just kicked the can down the road for a year or two, or a couple of years. We'll have to obviously cross that bridge when it comes to it in another couple of years. But they have some sort of caps on spending, but I don't know what the point of it is really, if you ask me, because they've risen it 78 times in history. Every time it's been reached, they just raise it again. So keep a cap on spending until you reach that cap, and then raise it again, I suppose. That's the way it goes. But anyways, into next week, we'll have a quick flick across next week. We've got the RBA out next week, expected to keep interest rates on hold, expected not to raise interest rates anymore, and expect to see more central banks over the coming months approach that sort of thinking. Remains to be seen how the Fed then react at the next meeting. ECB, we still expect to raise rates a couple of times. Bank of England probably to raise rates an extra time or two. Fed, hit and miss. Will they raise rates? Will they not? There was bets earlier on this week that they would stop raising interest rates. This NFP report maybe changes their tune a little bit. You got some trade balance figures across a bunch of different economies. You got Germany, you got China, you got Canada, you got the US trade balance figures. Doesn't really seem, and Australia as well, doesn't really seem to impact markets too much these days. So apart from that, not a great deal out on the calendar over the course of next week. This ISM services PMI, the consensus is 52.2, so a strong release. If you get another strong release in line with that NFP report, maybe that goes further towards, or pushes the Fed further towards raising interest rates. So keep an eye on that data release on Monday, but we will cross that bridge when it comes to it. So yeah, a little bit quiet week this week on the economic calendar. Apart from NFP today, plus the debt ceiling that's not part of the economic calendar. Economic calendar into next week also slightly quiet. So we'll have to see whether these trends continue or whether they reverse. Look towards our charts, look towards our assets that correlate with each other, and see if we can pinpoint some direction off the back of that. But anyway, that's it from me then, folks. Expecting a nice weekend in London this week, wherever you're from listening to this. I hope you get the same. Get out in the sun, enjoy it. Don't be sit inside the house all weekend. Well, yeah, that's it from me then, folks. So have a nice weekend, and we'll be back next week for another week of trading. Thank you.